All right, what's going on, guys? How you doing? Hamza, Bookie, what you guys? I hope you guys had a good day. Very, very boring day. Very unexciting, especially after Wednesday's big day. I was expecting a little bit more today because yesterday I told you after that big of a dump, we kind of need a balanced day yesterday on Thursday, which is exactly what we got. But then today I thought we would have got a confirmation of the move, which we did not. So today we're just inside yesterday's candle. Yesterday's low was 465.43. Today's low was 46. Actually, we did break down. So we did break lower than yesterday, but we closed within yesterday's range. What's up, Ricky? So you can't call it a solid inside day because we did break yesterday's low, but we're still inside yesterday's candle at the close. And for next week, the main level I'm watching is that 465 level. If 465 holds, we can recover and bounce for a few days. I will check it out, Bookie. I think I have it open somewhere. If we do recover next week, we need to hold 465. Then possible we can bounce up back up to 471, which is the next level. What's up, Andrew? Thank you. It's nice to meet you as well. I hope you hit trade or two. I mean, there was only one or two trades given out. But yeah, so SPY closed within yesterday's candle without that little dip this morning underneath yesterday's low. But for the rest of the day, we were just range bound. So what you guys need to realize is yesterday and today we're almost carbon copies of each other. So Wednesday we had the real move. Wednesday was when we just went sideways all day, and then the end of the day they flushed it after FOMC on Wednesday. Big drop. So obviously yesterday I told you a slight bounce or a flat day I'm expecting. What's up, Bikram? So what happened yesterday? First 15 minutes ripped, dump, and this is your high almost of the day, and this is your low almost of the day. Basically within the range for the rest of the day. I know we poked our head out for 10 minutes here, but we went right back into the range, and we just kind of balanced out down here because before we were way higher. So Thursday we kind of balanced out. I was expecting a bigger move today. Spot Gamma's calling for volatility. We had the balance day yesterday, so we were looking for a trend day today. What we got was exactly what we got yesterday. So within the first 15, 20 minutes, 30 minutes, whatever, we got the high of the day, dumped it straight to the low of the day, and then we were just inside the range all day. No Vanna, no pop, no trend, nothing. Just sideways chop to kill everyone's premiums. Puts and calls got destroyed today. If you held, you have to be in and out. Obviously, it's very obvious. In a range-bound market, options are very hard unless you're just playing for small gains. And that's exactly what we got. We had no pop into the close, no real drop into the close, nothing really to point out. But overall, for next week, what I'm seeing, we have CPI numbers next week. We have OPEX next Friday, options expiration. So next week, we should get some movement. Monday will dictate a lot of things. If we open Monday below 465 on SPY, it's possible that we're down all next week. If we open above 465, then we have to see what happens, because if it holds 465, there's a possibility of a bigger bounce here. If we go below 465, close below 465, I think we're in a downtrend for a little while now. Other than that, all my positions that I held over the weekend are all puts, so I am still bearish overall on the market until some things change. XLF all-time highs, very, very bullish chart. Very big resistance. It popped through, gapped up, held the gap, and now it's at another all-time high. Bank earnings are next week, so that's something to keep in mind. How likely is it that banks crush their earnings and XLF just continues to go up? Very low in my opinion. I think they'll either miss or it'll be a bad reaction to bank earnings, which will bring us back down a little bit, back down to earth. Obviously, XLF is a little bit far off its 8-day moving average. It's the bank ETF. This is not a tech stock or a penny stock that goes parabolic. So most likely XLF will pull back next week, I'm thinking. IWM much, much weaker than everything else. Why do I say that? We closed near the low of the day on IWM. XLF closed at all-time highs. QQQ was well off low of the day at the close, and SPY was well off low of the day at the close. But IWM, we closed right at the low of the day. So IWM is giving you exactly what I was just talking about. It's showing you weakness. So it's basically showing you its hand for next week. Big dump on Wednesday. Yesterday, balance day. Today, big dump, and we closed right at yesterday's low. Yesterday's low is 215.82. Today's close was 216.06. So just a little bit above yesterday's close, and that shows you that IWM wants more downside, in my opinion. We also have the 50-day curling down now. The 200-day is at 222. 50 days at 225. So we could have that legendary death cross coming either next week or the week after that. If we continue down on IWM, the 50 crosses below the 200, that's a death cross. That's a very bearish signal for stocks. And let's see what happened next week. I mean, anything's possible over the weekend. Any news can come out. ES, you guys see the ranges I gave this morning, just completely range bound. No break under, no break over. Completely range bound between 4666 and 4689. SQQQ, I'm still in a lot of those calls. $6 calls for Jan 21st. We got them for 21 cents. They were trading at about 85, which is like 300% today. I'm still holding these. I'm expecting if the market continues weak, I should get a 10 bagger on these. Again, everything matters about Monday. TNX. So most of you free members in here, or a lot of people that haven't been trading a long time, they don't even know about TNX. TNX is the yields. So basically, yields go up, and when the yields are up, growth and tech gets destroyed. And right now, we're at a high that we haven't seen since January of last year. So January 2021 or January 2020. So 2 years ago was the last time yields were this high at 1.8. We actually hit 1.8 this morning. We did pull back a little bit from 1.8, but this is a weekly cup and handle breakout, guys. So yields are a very bullish chart, which is very bad news for tech and growth. VIX pulled off a lot from its high of day right now, but it just looks like it's bull flagging. Huge day on Wednesday, 16.6% day. So obviously 2 days consolidation is necessary. We have a support at 1869. We close at 1873, guys. So Monday can spike the VIX again. I am bearish. I told you all my positions for next week are all puts. Let's see what happens. Bitcoin. So the name of the post-market video was Crypto's Hanging On by a Thread. Why do I say that? There's so many levels here. There's a weekly head and shoulders ascending line, which I've shown you guys like 10 times already. So basically this is the neckline for the weekly head and shoulders here. Shoulder, head, shoulder, and we broke it convincingly. So we didn't just peak below it and then go right back above it. We broke through there convincingly and came down to the next support. Now we go to the daily. We have another head and shoulders. We have this shoulder, head, shoulder, and we're right at the neckline again. That's why I said 40,675 is a very important support. Obviously 40,000 is a psychological number as well. If we break below 40,000 and hold below 40,000, we can come all the way down to 29,000 on Bitcoin. And that is the next very, very solid support. You might as well just draw a line here right now. So around 29,000, that's where the next support is if 40 cannot hold, guys. So if 40 gets broken and we go below, there's not a lot of support here to stop it until we go down to 30. Other than that, not much. Tesla, big trend day. Wednesday just got destroyed. Thursday, sideways like the market. But today, it was relatively noticeably weaker than the market. So the market went range bound. Remember, market went up, it went down, went up again, and then sideways. Tesla went up and then straight down, bounced a little bit and then down more. So what I was thinking was there's a lot of shorts in Tesla, obviously, because the stock keeps going down. I was thinking most shorts cover right before the close here between 3:30 to 4. Obviously they didn't. Obviously the price didn't move. They wanted to screw everyone. So lottos went to zero. It happens. That's why they're called a lotto. You have to expect zero on them. Other than that, on the daily on Tesla, it's not looking good. Weekly, not looking good. I mean, we had this huge gap up on good news, 143-point move in one day, and it gave back almost double that move. So we went all the way up to 1,200, and right now we're trading just above $1,000. So $200 down move in 4 days, and if you're in Tesla, you know this makes volatile moves. Right now we are at a pretty solid support here at 1,000. It's just a psychological support. So if 1,000 holds, we can make our way back up. But there's a lot of resistances on the way now. There's 1060, 1080, 1100, 1117, and then 1150, and then all-time highs. So Tesla has a lot of overhead supply now. We need some good news over the weekend for this one to turn around. Other than that, I see more downside on Tesla. There's still a gap to fill all the way down to 886 now. So if 1,000 breaks and holds, 886 would be my next target on Tesla. MasterCard, I'm in short here. Bookie showed me this chart. I liked how it looked and I jumped in with them. There's a broadening wedge here on MasterCard. Every time we've gotten to the top, it's dumped. Every time we've gotten to the bottom, it's ripped. So right now, it look like two big rejection candles on the daily at resistance. and we kind of rolled over. Yesterday we held the 8-day moving average. Today we were actually underneath it for much of the day, but we closed above it. So it is a little bit concerning that it closed above it, but for right now, where the market is, where the stochastics, the RSI on the chart itself, we're closer to the top than the bottom. We have a lot of time on these MasterCards, and I will continue to hold them. On Monday, if we close below the 8-day, I'll have more conviction in the trade. If we close above the 8-day on Monday, I might have to cut and roll to a closer strike on these puts. They won't be down much because we have so much time on them. But let's see what happens Monday. Mara, absolutely perfect head and shoulders here, guys. Here's the shoulder. Oh my god. Here's one shoulder, here's the head, and here's the other shoulder, right? So that's what we're watching on Mara. We broke through the 30 key support here was $30. We broke through that. And then what did we do? Let's go 2-hour chart here. We broke through the support. We retested it from the bottom right here. So we broke through support, retested it, and now we're continuing down. Right now on Mara, it's the exact same as the rest of the market. I mean, Wednesday was an awful day for Bitcoin. It was an awful day for Mara, rest of the market as well, as you guys see here, just straight down in a line. So yesterday was a bounce day, obviously. Today I thought we were going to get a bigger move, either a bounce to cool off the RSIs and indicators, or we were just going to continue going down. But we got the exact same thing as the market. Big rip at open, big dump, and then just range bound for the rest of the day. So very, very boring trading. You do not want to be trading options when you're in a range. They just burn premium over and over again. Unless you're taking them off for 10, 20%, ranges just kill your options. So on Mara for next week, I don't expect much, honestly. It all depends on crypto this weekend. Obviously, if crypto fails to bounce this weekend and continues weak, I think Mara will open up under $28 on Monday, and our puts should be up nice anyways. You guys had 50 or 60% on them today anyways, so if you didn't manage, then that's your own greed. Uber, here's Uber. So we have this channel that we've been watching. We're looking for the same move as November 5th here. We had 5 straight down days off this resistance. Same with this time, we touched it almost like so many down days off of that, and right here as well, 3-4 days off of that. So every time it tests this resistance, it pulls back hard. We have $41 puts for January 28th, and it's down 3 days in a row, and it doesn't look like it's turning around. Stochastics are still overdone. RSI is still higher than low. It's at 50, so it's right in the middle of the range on RSI on the daily. But we closed below the 50-day, we closed below the 21-day, and I do expect more downside on Uber. The next support is at $40 flat, which will put our puts into the money. So I'm not worried at all about Uber puts. They look good still. Lucid, strong day. 2 days in a row, we've hit Lucid for puts in the morning for 100% plays, or almost 100% plays for 2 days straight. So we caught this move, sold almost right at the bottom. We caught this move, sold almost right at the bottom. When you're not greedy, I mean, right here, when I bought the Lucid puts, we had 2 days till expiry, right? So I'm not looking for 1,000%. Maybe I'll leave 1 or 2 or 3 or 4 contracts as runners, depending on how much money I make, just in case it keeps dumping. But you take the bulk of your position out here, like quickly. So we did yesterday, and then it just ripped to high of day and continued ripping into again. So today, same story, ripped. We caught the puts I caught them a little bit early, right about here. I think Bookie caught it right at $40. Drip down, we got like 90-95%. A lot of people got in cheaper than me. They all got 100%, so congrats to all the free members that caught it. Save some of that money and join the premium chat so you can make more plays like this. Sold a bunch for 90%. I had a few runners left, and obviously look what happened to Lucid after. So that's crazy that we caught puts on the strongest name in the market for the last 2 days. Other than that, I mean, Lucid looks pretty good going into next week. It's kind of basing out here, and it kind of broke out of this little range that it's been in. It rejected right off the 50-day, 42.91. I remember Bookie calling that out right away. Congrats, Optimus Prime. I hope you made some money. So we rejected right off the 50-day moving average, which is at 42.91. The high of the day was 43.29. We closed below it. Looks like people took profits or went short at the 50-day moving average. Next week, we have to see where we open. If we get over the 50-day moving average on Lucid, then we can run back up to these absurd numbers like 45, 50, 56. But as long as we stay under the 50-day, this one's going to be hard to get through the 50-day. There's so much supply up here now. MSTR sold these puts for a double. 470 key support, under 470. It can go all the way down to 430 and 411. 411's my number next. Yush has 430 as well. Let's see where he sees that one. Right about here, probably this low right here. So Yash says under 470, 430, 411. I'm out of the play. I think he's out of the play now as well. I just sold them quick because it's not that liquid and I might get stuck in them. So sold them for a double. I'm happy with that. I rolled into Mara. Cheaper play for the members. And let's see if that one works out. Baidu looks great. Actually, China was very strong, held on strong. We closed above the 50-day moving average. We broke out of this bull flag. Obviously, we started off looking a lot better on this Baidu chart, but at the end of the day, you guys seen the market was weak. We were just kind of going sideways. We closed at 153.33. The 50-day moving average is at 152.15. So as long as we stay above there, we should be good to go fill this gap all the way to 160 on Baidu. One thing I want to point out is this PKK. I want to give a big shout out to Blitzkrieg in our chat. If you guys don't know who he is, he's a monster. He's one of my good friends, and I've never seen anyone read a balance sheet like him. He's like the Indian Warren Buffett. So when he calls out an equity play, you guys should take notice. Sometimes I don't even look into the equity plays that he calls. I just follow them. So yesterday he bought this PKK. It's a Chinese fintech company. I know fintech's weak. I know China was weak, but what I liked about it was I opened the chart. It's at the 200-day. He bought yesterday as soon as it touched the 200-day. I looked today and it was even cheaper than where he bought. So what I did was I had a limit order in today for 535, right about here. I don't know why it didn't fill. This whole half an hour didn't fill me on TD Bank. I had limit order in. I went back. I changed the order again. Like I canceled 535. I put it back in for 535. And luckily on this little 5-minute candle here, it filled me. And I just looked at my TFSA on TD Bank, and this thing is up 30% from my buy on equity in one day. So what I wanted to give a shout out to Blitzkrieg on is this guy knows how to read balance sheets so well. All of his equity plays, or 95% of his equity plays, are based purely on fundamentals. If you guys know about us, we're like 90% of my plays are called out technically, which is momentum. We're trying to catch the momentum moves. This guy calls out fundamental plays. They might take a little bit longer to play out, but I feel much safer and I have much more conviction when there's fundamentals behind the play as well. And obviously, if I can time it like this, I mean 535 and we close at like, let me just check this right now. I'm pretty sure it's up more than 20% in a day on equity. And I'm pretty sure a lot of options didn't even get 20% today in this range bound market. So I'm saying when he posts an equity, pay attention to it, guys. He's very, very smart. And it's not just the chart he's looking at. He knows how to read these balance sheets. Where is this thing? Let's check this out. So from where I bought to where it closed, I'm already up 25% on the equity. Yep, Zomd was his play. Another one that he called out was this equity that he gave me way back in the day. That one was a big play. We bought it like under $2 and it went all the way to, like, you guys know, it was crazy. Zomd as well. I'm very comfortable holding fundamental plays because I know long term the fundamentals matter. Maybe short term they go through some pain, but long term they usually matter. And just pay attention to his equity plays. It's bottom line. He knows how to read balance sheets very well. So Home Depot here. It's doing exactly what we thought. So we have a neckline here at 414.84. We have the inverse head and shoulders forming actually here. So you have the shoulder off the neckline, you have the head off the neckline, and now is it forming another shoulder to go back up, or is it failing the resistance and just gonna roll over here? Oh my god. Right there. So it did close below the 50-day. Everything on this chart screams short to me. I love bookie short. I'm in a lot of short positions, so that's the only reason I'm not adding more. But this neckline, as long as 414.84 holds, it could be the high for a while on Home Depot. We have run a lot. If you guys zoom out on the charts, even look at the weekly, the monthly, like Home Depot is just ripping. I know wood got more expensive, but still Home Depot, guys. And your puts should work, bookie. I like your puts a lot just because we closed below the 50-day moving average for the first time since way back here in October. So let's see where the market goes next week. If continued weakness comes, I'll still be bearish. I'll still be looking to short the rips instead of buying dips. If we change into strength next week, I'll be ready. I'll be a bull real quick. You have to be able to switch over really quickly. Don't get stuck one way. And thank you guys for attending. I hope you guys have a great weekend. I'll see you on Sunday.